Good day, traders. Can you answer a question for me? Were you prepared to give yourself money out of the market this week? If your answer was, I don't know, then stay tuned. I've revamped the On the Radar videos to basically just do them once a week on Wednesdays, right after the market closes, and we'll basically get them edited and up to you as quickly as possible. In interest to provide you excellent charts for our analysis, we switched to this format, as I said, higher quality, high depth, and it'll be posted on our YouTube channel, Market Tech Talk. I think you'll be really pleasantly surprised by the two stocks we're going to be reviewing today. So let's get into the market analysis and hang in to the end for the stock update. And we always like to make sure everybody knows that the reason we do what we do is because it is for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. Jump on over to the chart. And we're starting here with the spiders. Spiders, as we see from yesterday, put in a very interesting pattern. What is that pattern called? Well, a bearish engulfing pattern off of yesterday's price action. What did we put in today? Well, that would be considered a bearish harami inside day, and we're sitting right on top of support of the moving averages, which is an excellent. We may not, in fact, go very much further down than this. However, there is always the possibility that price actions could, in fact, move all the way back down to what? Down there to that uptrending line, or if we blew through that, or we have to come to rest about the 406 level on the S&P. What else can we take away from this particular chart? While this isn't an official, absolutely accurate double top, it may act like one. In other words, the highs over here, this was at 422.82. The high here was at 422.72, so only a dime apart. Now, while the midsection of that potential double top hasn't met the exact technical definition of a double top or a double bottom, being somewhere between 10 to 15 to 20%, we do in fact still have a level of resistance that worked. So will it repel prices and prices fall all the way back down here? We'll see. We could throw a fib on here, and it's going to bring us to rest about 34-day moving average. That really quick, so you can have an idea. Each of the indexes, as we say, I've done this before. So 50% retracement would bring us right back down to the 34-day moving average. So that, and which happens to be right square, close to that uptrending line. So what am I looking at on the SPYs? We're in a wait and see mode. We basically, the TSI and the market forecast and the MACD has not turned over totally, but it's not screaming out of here like it's on a big tear to the upside either. So that's one. Excuse me. Got a little bit of a hoarse throat due to my allergies kicking in. So what else is next? The Qs representing the NASDAQ. The Qs also looks kind of similar, doesn't it? The only thing with on the Qs, they are closer to the moving averages, the 8 to 20, the 34, and the 50. All of those levels of moving averages represent some dynamic support, and then dynamic support also is reflected on this uptrending line, which is way down here about the 321 level. I'm liking support actually at about 322 to 323 level at 324. A pullback into that area might give us an opportunity to a bounce back. As you can see, the histogram on market on MACD has in fact rolled over. PSI has just about rolled over. Let me. Sometimes you got to blow things up to get a better view of them. And so as you see, price action starting to move down, have not closed below the moving averages yet. So that's a positive. However, that is still a bearish engulfing off of yesterday's candlestick, a bearish Harami type signal today, inside day. And it may react in one of two ways. It may basically say, okay, hey, that's my trigger to go to the upside. But we'll see. We'll see what happens and transpires with that. What about the Russell? Russell had gotten a little bit of a kick in the butt, which was nice, to the upside. So the afterburners kind of kicked in. We pushed back up. But what did it run into? It ran into a specific area. Just look to your left. Anytime you start seeing some stallings, look to your left. What do you see? Well, that big red bearish engulfing candlestick there is a level of supply. In other words, that's where the sellers are living right now. And until the sellers are basically taken out of this area here, we would anticipate every time we go up to that level, we would be rejected and move back down. As you can see from the price action today, though, it held up fairly well. Now it needs to break out of that. And then what happens when it breaks out? Well, it's going to throw itself right back into another level of supply that could cause this rally to peter out. A couple other ways to look at this is just throw on a trend line that connects that low right there with those lows right there. And as long as that trend line remains in effect, intact, and isn't violated to the downside, we're going to continue moving up. Now, I'm anticipating, what else do we want to look at here? Well, one, yes, we're on a short-term uptrend in that a swing low to swing high, come down to a higher swing low, and then we took out that swing high. So that puts us on a short-term uptrend on the Russell or the IWMs. Do we have a trade right now? Not really, simply because I'm a pullback trader. So I'm looking for a pullback into the moving averages, or I'm waiting for it to get back up here into a level of past resistance, which is up at 231 for a potential. If it rejects at that level, I would look for a stronger pullback, and it gives us a better opportunity to trade against the short-term trend and what may start shaping up, just a consolidation pattern, a box range, if you will, on IWM. So if you are joining us on YouTube, I really appreciate and thank you so much. We have been taking over 700 subscribers. Please let your friends know that we are going to be live, not live, but we are going to be posting the swing trading setups on the radar on around Wednesday of each week. I'll get that up after the market is closed. And so if you haven't subscribed to us yet, hit this, go ahead and subscribe, hit the bell to be notified when those updates are up. And then what else do we put on the YouTube channel? Well, we also put on really cool things like trade tips, technical analysis tips. And then every Friday we do how to make money trading stocks and option, where we provide me and a panel of two other expert traders and elite traders provide 3 stocks, growth stocks, that could be setting up for some really great swing trades the following week. And so speaking of stocks with great opportunities for swing, take a look at a couple of stocks that I am looking at currently. One is our buddy Tesla. Now, I highlighted Tesla a couple of weeks ago before we went off air, but I highlighted Tesla a couple of weeks ago. Why? Well, one, and I'll just call this to your attention one more time. Everybody thinks I'm crazy, but that's okay. I've got a really great looking head and shoulders right here. A bearish head and shoulders. The neckline has been busted. We are going back up to test the neckline. Now, are we going to revert and fall from the sky? You know, we'll see. But this head and shoulder pattern projects, now that it has been confirmed, projects that we would anticipate a move down to, get this on Tesla, down to about $203.82. Let me get you the specifics on that. And that equates to, yeah, 203.84. Now, there is a target a little bit up from that, which is the actual downside target from here to here. And so we're just projecting down how far technically it could potentially fall. Now, is Tesla going to fall that much? I don't know. The other question that we answered was, when do we expect that trade or that move to be, happen by? And the if you measure from the start of the left shoulder over to the finish of the right shoulder, and then project that forward, we're looking somewhere in the latter part of January, first part of February 2022. And so if you are an option trader, what I'm looking at doing is I'm looking at laying in buying a put that is out of the money, way out of the money, down about the 320 level, buying that, and then selling call spreads against it as price action moved down. I would buy the 320, approximately 320 put that's out in January 2022. It was the leap for that. So give me just a second. I need to freshen my. Okay, so that's that. The other one that I am looking at, and I have to tell you, we basically traded into some option trades on that, and that's Tractor Supply. And it's looking really good it has found support right there about the 177 level, 177, 177.49. But as you can see, we're putting in a nice little bull flag. 4 weeks it's been basically working its way lower. TSI heading down. This is a weekly chart. Market forecast heading down, and T headed down. However, how's it looking on a daily chart? You have to remember the daily charts, the momentum will show that it's turning around faster than or precede that of the weekly chart. And as you can see, all the momentum indicators that I utilize, the TSI, the market forecast, and the MACD. I've added MACD because MACD is a little bit of a lagging indicator. But if you want more information about, I'm going to be posting up some videos in the very near future comparing the three of these and how to use them. MACD is a little bit of a lagging indicator. What it does, excuse me just a second. What MACD does is it provides a secondary confirmation of the swing that shows up earlier in the TSI. If you've never heard of the TSI, I think I have put a video up on the YouTube channel, Market Tech Doc, that talks about the True Strength Index. If you can't find it there, shoot me a DM or shoot me a message in the comments on this video to let me know, hey, Dennis, it's not there. Speaking of which, so Tesco. How do we want to potentially trade this? As you can see, we're below all the moving averages, except we're right at or slightly above the 50-day moving average. That's the golden one. We have a hammer. You put in a hammer yesterday. Blow this up just a little bit. You put in a hammer yesterday. And so it is looking for the place where buyers are going to finally get traction. And that corresponds approximately to where it broke out from before. So if we look to your left, again, hear me say that a lot, look to your left, what do we see? We see a body of congestion where buyers took it and then ran it up from about 177, 175, all the way up to close to $200. Now that's about, well, that's $25 on 175. I think that's about a 12.5%, 13% gain on that. But Tesco has good option chains. Other thing that makes Tesco interesting is that we're about 6 weeks away from earnings. This may be setting up for a pre-earnings run. I track several stocks that have earnings or that do earnings every quarter, about 40 of them, and I track the ones that tend to do a little bit of an earnings run. And as you can see, this is starting to push up and move higher. Okay. That's a good potential situation there. And the last time, about 6 weeks before earnings, is where it did bounce, start to move. How far did it move? That's one of the things that is always a good thing to know. And before earnings, here was earnings here. And so it went from, here's one spot, it went up 5%. That equates to $10. So if I can get 5 to 10% move, anywhere from 6, 8, it's around 8 to 2 weeks before earnings, that turns out to be a trade you can keep going back to over and over again. If you want to know additional information about these type of trades, of course, please join me at Active Trend Trading. We provide folks these kind of trades every week through our autopilot trading system, where we send you a pre-flight checklist that shows you exactly where I'm getting in, where I'm getting out. And so, but anyway, that's what we have for today. Let me know what you think about this new format. Again, I look forward to answering your questions. I look forward to also to covering stocks you would like me to take a look at. And how do we do that? Turning on. There we go. We do that by you letting us know what you want us to take a look at, and I would be glad to do that. I've been evaluating and analyzing stocks for a long time. So with no further ado, we'll get this video ready for you. Again, I always appreciate your thumbs up. I always appreciate if you share this video with other people, and it's perfectly okay. Share it. That would make my day. I'd really appreciate that. And again, 700 members, thank you for subscribing, and we'll keep providing you improved products and what I'll do is I'll keep improving the videos that we're sending out there, and also showing you where we're going to be getting in, where we're going to be getting out, and what to expect. So until next Wednesday, aloha, God bless everybody.